What is going on, traders? I hope you're all well. So, as it was requested by a lot of you in our free Telegram group, here is a top-down analysis on Matic USDT. Price action only, as always, guys. So, what we can identify here from a monthly perspective. Okay, from a monthly perspective, since topping out here, the market then started to consolidate in a monthly range. After the monthly range highs was taken out with this manipulation to the upside, the market spiked through this buy side liquidity, this high right here, took out all of the stops from sellers and induced buyers with this monthly bullish engulfing candle. Then you can clearly identify the market made this railroad formation, bearish engulfing formation, back down. And this was the top of the market. Ever since, we have been in a bear market. And don't get confused, we still are in a bear market. So we have this beautiful monthly accumulation, manipulation, distribution, formation from a monthly perspective. Now, if we just clean our charts and go down to the weekly, what we can identify, or even if we stay on the monthly, let's have a look at this particular bit of price action. So since we broke structure to the downside, we manipulated these highs, broke structure to the downside, came back up for a retest. Okay, this was the last significant monthly high before the market made a bearish impulsive wave. This is a bearish impulsive wave that took external liquidity. External liquidity in the form of this swing low. There would have been sell side liquidity below that zone, and the market has broke below it with a bearish impulse. If you take your Fibonacci from the high to the low of the bearish impulsive wave, you can see that the market, after the impulsive wave, as you would expect, the market provided us with a corrective wave. Where did the market correct to? The market corrected exactly into that area of fair value that we have from a monthly perspective. So you have this fair value gap, this liquidity void. The market removed the external liquidity, then got attracted back into the internal liquidity. As you can see, we spiked through the fair value gap once, then we swept the high, tapped into this order block that we've got here from a monthly perspective. Okay, and now you can clearly see that the market is making the continuation to the downside. So here from a monthly perspective, obviously we're bearish and we have this monthly impulse correction continuation pattern. So from a monthly perspective, I'm definitely expecting this low to be taken out where there is going to be a lot of sell side liquidity and a new monthly low to be formed. Now, how can we potentially anticipate where this new monthly low is going to be? If you take your Fibonacci from the high to the low of the corrective move, the minus 0.272 is the downside target. Wow. Okay. So that would mean Matic is going to die, which I don't think is going to be the case. But nonetheless, as you can see, we definitely expect this low to be taken. What I can also spot from a monthly perspective before we drop down to the weekly is we do have this fair value gap right there. That fair value gap is just sitting at 10 cents, right, which is just above the Fibonacci extension downside target. So I definitely expect this low to be broken, and I potentially expect price to come into this area of fair value all the way down at 10 fucking cents. Yes, you heard that correctly. So now let's drop down to the weekly time frame. What you can identify from a weekly perspective. Sorry, let's just go back there. Okay, so from a weekly perspective, you can see the market here swept that high. So let's just run through this price action because it's very, very clean price action here. So we get the move to the downside. We take the external liquidity, take the sell side liquidity. Then we make the corrective move into the fair value gap. The market reacts from the fair value gap. This induces sellers. Where is the stop orders of sellers going to be? Above this high. Then you get the manipulation to the upside, taking out the high of this particular range that we have here. Okay, again, accumulation, manipulation, distribution, right? Not only on a monthly perspective, but we have it as well on the daily. Beautiful price action here. So now what we can look for, what we can identify from a weekly perspective is we're currently testing this low. Below this low, residing below this low, there is what? There is sell side liquidity. Okay, we go down to the daily time frame. What we can identify from a daily perspective is the market has made another bearish impulse from point A to B. This bearish impulse removed the external liquidity, the sell side liquidity that was here. During the move to the downside, the market left this area of fair value. The market then took the external liquidity here, made the correction move into the internal liquidity, and now we expect to see the continuation to the downside. So the monthly, weekly, daily timeframes are all aligning for bearish continuations, and this gives you a higher probability for looking for a short. Now, if we drop down to the 4-hour time frame, this is where things get interesting. So from a 4-hourly perspective, again, macro, micro perspectives, multi-time frame is key. Now we're down on the 4-hourly, you can see exactly the same thing from a different time frames perspective. Now, what I'm referring to here is this accumulation, manipulation, distribution. And we expect this low to get taken out, right? We expect that daily impulse correction continuation pattern to hit our downside target. Where is our downside target? Again, if you take the Fibonacci from the high to the low of the corrective move, you can get a downside target of around 47 cents. And that fits perfectly for the liquidity that's just below this low. So overall, what I'm looking for here, I'm trying to get in a short position. Now, where can I potentially align myself with the highest probabilities to look for a short? If you just remove this, so it's nice and clear on the chart, okay, you can clearly see we have this double top liquidity here. This was an inducement. Then the price swept the highs. It got attracted into this supply zone because that's where the institutional orders are. The market hit the institutional orders and it instantly saw a shift in market structure. Why is this the shift in market structure? Because you can clearly see we swept that high, then we broke that low. That was the last higher low from a 4-hour perspective during this corrective move that pushed the market into the highs. Then we shifted structure to the downside. Now, if you have a look at the particular move that shifted structure, we want to be looking for an area of internal liquidity. What I mean by that is an area of fair value. And we have one exactly from this wick low to this wick high. That is a fair value gap from a 4-hourly perspective. So basically what I'm looking for here, I'm monitoring this area of interest all inside the lower time frames for potential entry confirmations to potentially capitalize on this move to the downside. I hope you enjoyed the video, guys. Speak to you all soon.